Hello traders, you're welcome to this video. In this particular video, we are going to be looking at one of the most powerful candlestick patterns for spotting market reversals with precision. Now, there are a lot of candlestick patterns that are effective, but in this video, we are going to be looking at the bullish and the bearish engulfing patterns, which are considered to be one of the most powerful candlestick patterns. Okay, so starting with the bullish engulfing, this pattern usually forms at the end of a downtrend and it signals a potential reversal to the upside. Now, how it forms is that the first candle has to be a bearish candle and it has to be smaller than the next candle, okay? And it has to close lower than it opened. It has to have a body. Basically, the candle has to have a body. So we can see that this fits into our description. The first candle should be a smaller bearish candle that closes lower than it opens, and remember that it must be smaller than the next candle. Now the second candle, which must be a bullish candle, should completely engulf the body of the previous bearish candle. As you can see, it completely engulfs it, right? Now it means that the second candle opens lower than the previous close. That means the open price of this bullish candle has to be lower than the closing price of the bearish candle and higher than and it has to close higher than the previous candle's open. So this fits into our criteria, making this a bullish engulfing pattern. Okay. Now the key elements to look out for is the location, one, which means that this pattern should appear at the bottom of a downtrend, and we can see that this was a down movement, so a downtrend actually, and that's when the bullish engulfing pattern occurred. Okay. Number two, the engulfing body. The body of the bullish candle must fully cover the body of the previous bearish candle, as we can see that happened here. The wicks or the shadows don't necessarily need to be engulfed, but the body must be engulfed. Okay. And then number three element is volume. Higher volume on the bullish engulfing candle can increase the pattern's reliability. Okay, you might want to check the volume as well. Okay, it signals you can just decide to add the volumes indicator for that purpose. And we can see that there was a spike in volume just after the engulfing happened. Can you see that? So higher volume on the bullish engulfing candle can increase the pattern's reliability. Even right on the bullish candle, we can see that there was an increased volume around here. Then after that, we can see that volume even spiked further. Now, why is it effective? It is because the bullish engulfing pattern indicates that buyers have overwhelmed the sellers and the momentum has shifted to the upside, making it a strong sign of a potential reversal. So you can enter a buy trade right after the pattern forms. You can set your stop loss right below the pattern, and you can sell or take profit at the nearest resistance level. Or you can use indicators to confirm your exit. Okay, so basically that is it. Now, as for the bearish engulfing pattern, this pattern usually occurs at the top of an uptrend and signals a possible reversal to the downside. Now, it's just the opposite. It is just the opposite of the bullish engulfing. Yeah, the bearish engulfing is just the opposite of the bullish engulfing. 74.57. Okay, I was just checking to be sure that this is a bearish engulfing pattern. Okay, now I've confirmed that it's a bearish engulfing. So now the bearish engulfing pattern, like I said, is just the opposite, okay, of the bullish. Now the first candle has to be a smaller bullish candle that closes higher than it opens. It must have a body, basically. Now the second candle has to be a larger bearish candle, which you can see here, that completely engulfs the body of the previous bullish. I was checking to be sure that the open price of the bearish was higher than the close price of the bullish, okay, because that is a criteria, okay, to be sure that this is actually a bearish engulfing pattern, right? So because the bearish has to completely engulf the body of the bullish, okay. Now the key elements to look out for is the pattern should appear at the top of an uptrend. You can see that there was an uptrend here, and then this pattern occurred just right after the uptrend. It was already coming to an end, and then we had a pattern form, right? And then right after the pattern, we can see that the price began to sell, okay. So now the body of the bearish candle must fully engulf the body of the previous bullish candle, okay, as you can see. And then in terms of volume, there should be an increased volume. Well, we can see, well, the volume was quite reasonable though. Not like it was the highest of volumes, but it was reasonable compared to the previous volumes. You can see at this point it's quite increased. Okay, yeah. So higher volume during the bearish engulfing signals stronger signal. When you have a higher volume during the bearish engulfing candle, it indicates a stronger signal. Why is it effective? The bearish engulfing pattern signals that sellers have taken control, overpowering buyers, and it typically foreshadows a downturn or reversal of the existing uptrend. So now we would have entered a sell right after this pattern, stop loss above the pattern for a tight stop loss, take profit at the nearest support level. So you can use other indicators to confirm your exit. Basically, okay. So the bearish engulfing pattern and the bullish engulfing pattern, they are wonderful patterns, right? It doesn't mean that they are foolproof, okay? They can fail, yeah, because no strategy is foolproof, okay? So you might want to apply proper risk management, make sure that you don't use amounts you cannot afford to lose, right? And use good risk to reward ratios, okay? So now, why are engulfing patterns effective? Why do they work in predicting trend changes? Engulfing patterns are powerful because they show a complete shift in sentiment. When the second candle completely covers the body of the first, it signifies a significant change in momentum. So in a bullish engulfing, buyers take over after a period of selling. And in a bearish engulfing, sellers take control after a buying spree. So they are especially useful when they appear near significant support or resistance levels and are accompanied by an increasing trading volume, which adds more credibility to the reversal signal. Okay, so when traders spot these patterns, usually it often leads to a more cautious approach from trend followers. Okay, while reversal traders look to take advantage of the shift in momentum. So these patterns usually show us a shift in momentum, possible reversals about to take place. So by mastering the bullish and bearish engulfing patterns, traders can identify high probability reversal points, making them essential tools for anyone looking to improve their price action strategy. So I hope you found this video insightful. Kindly like, subscribe, and click on the notification bell so you get updated on further videos for more trading insights. Cheers and happy trading.